because they were outstanding. Actually, you know what? I'm just going to start with Euro USD because it was the best. So this is when I opened up my computer. It was dropping. And I kind of want to figure out what we're looking at here. So let's go to the 1 hour and look at the fair values. So we pulled this and we created this gap on Monday morning, and I was trying to figure out where our potential gaps could be, and it moved down into this fair value area right here, specifically this one, and then we also had this area right here. Okay, so wick, draw this out, right? So we had moved into this already. And then this was yesterday. So I was looking at this fair value gap, and when it was rushing down on it, I was a little concerned with how it was going to react. I thought we could potentially enter a downtrend. However, because it was in a fair value gap, and I was expecting that it was fully going to pull this, and I shorted it right here for a break of these lows. As it was coming in, I took the majority of my profits off, and then it started to print on the 1 minute one of my patterns. So I closed the short position and I went long, going for a 3-to-1. It was a little bit over a 3-to-1. Okay, and what that pattern is, it's quite simple, really. We have a push down, it comes up, and it rounds like so, and goes higher. So we have a V, a push up, a rounding, and as it starts to push higher, we buy, stop below the lows, and this could be a full reversal. This could continue quite higher, and I'm looking at potential fair value gap areas for a target. Okay, so on the 5 minute, no, it was the 2 minute. This whole wick, okay, so I was targeting a tap of this wick for a potential reversal to the downside. And I have fair value areas drawn out already, right? So we have a fair value gap with the strike area, which is strategy 3. Okay, so a rip of the high here, I'm looking for shorts. We had a primary fair value gap, right? This is an IFG fair value gap as well. Again, a strike area, fair value gap here, and a strike area, right? It's respected it, went into a downtrend. There's also that area. On the 5 minute, let's look at the highs here. Okay, again, right? Retested, broke under, retested. So there's something going on. This is a IFVG, right? And it's invalidated on this end and reconfirmed on this one. I'm not really sure how people like to call it, but if it pushes through and pops through and prints a fair value on each end, it tends to be very powerful. So that means if it invalidates a fair value gap, it moves up. As it pulls back down, that's a buy area. So in this situation right here, we have a fair value gap here and here. Here and here. So we draw this out. So on a breakthrough and a retest, maybe it'll hold that level. So because I was trading on the 1 minute, which is not something I usually do, but I just really wanted to get laser entries and kind of get a better feel of what was going on. So very quickly here, we buy this, it pushes up. I want to lock drawing so it doesn't do that. Oh, it still does that. So we buy that, it pushes up. And then, as it pushes up, it shows me the potential coiling that I like to, I call it spiraling because it starts to build a strategy 3. Effectively, you have a new fair value gap, you have a doji candle or some kind of wick retracement, and then it comes down and skips continually higher. So here you can see it pushed up, and it created this tink right here, and then continued higher and printed another fair value gap. So now we have a fair value gap here, and we also have this push down into this fair value gap. Okay, so potentially what could happen is as this is pushing up, it comes down, it prints this doji. That's step one, that's strike one. As it pushes down and continues higher, strike two. Pushes down, continues higher, strike three. Breakout, we buy, right? We can buy anywhere on here, but our stop needs to be under the first strike, or preferably at the bottom of the fair value gap. So that would be inside the body of this doji. So we would buy on a pullback and a continuation. We buy strike area. Our stop is in the body of this. Okay, but this could be the first strike. It could push up and then fail through here. I've started to sell in situations like this and realized that I was selling at the bottom as it starts to round up and push, because this is the real strike area. So I drew these two lines out to simulate that. Okay, and what ended up happening is this did in fact push higher, and then it ranged. Okay, it ranged within this fair value gap area, but even if it came down and ranged inside of here, which it did on odd USD, it did pull down deeper, it's still valid, right? Because it's still valid, right? Now, as we move into this order block, what I have noticed is the order blocks are usually a retest of a fair value. So the trigger that I'm looking at is not this order block. It is, in fact, this. Fucking stay, bitch. This fair value gap. Okay? And the trigger here on this fair value gap is these two candles. So if price pushes up into here, doesn't touch these, and then falls, it's a high probability short. If, however, it pushes up into this quite easily, on a pullback, it will most likely break it, so I'm long biased. And as we had here, right, I'm just going to mark out exactly only the trigger area. As this happened here, it moved directly into the trigger area. Okay? So this is another trade that we have. There's a fair value area here, right? I drew this out yesterday. It pulls down into it. It sweeps a low, which is a trigger entry. On a sweep of the low, if it hasn't pulled the high, so it pushed high up into this, so I'm expecting it breaks. It, however, did not break, instead pulled back first. On a sweep of the low inside of a fair value gap, we have an entry for a break of the highs. Let me show you how that looks. So, did we break the highs? No. Did we retrace instead before breaking the highs? Yes. Did we come into the trigger area, which means that we're most likely going to break it? Yes. Okay, so we're bullish. Where is the recent fair value? Here. Where is another fair value that we seem to have a lot of respect for? Okay, here. Right? It bounced along in between these two areas right here. Right? It's really held this area. Right? And we also have a fair value here. So, and the lows are right there. So, if people are piling into buy positions, where will their stops be? Here. So as this starts to push up, or even on a break of this in this first push, we can buy, right? And we can put our stop here. And if it fails here and continues a little bit lower, right, we do have the accumulation out of here, right? So as it pulls these lows, it would be moving into a fair value gap. So we would have lost this trade, and immediately, okay, as it takes out this primary low and starts to round out, again, we buy again for that break, and the break took place. Okay, so we got the break. Now, strategy 3, if we pull this and dump, there is a probability that we continue lower. So this is where I took a loss. It pushed up. I entered on the break of this high. I entered right here short. It pushed down, and then it pushed higher, and it took out this high here. Okay, so now I'm thinking we could actually hold this. So as it pushed back down, I closed out for break even. And again, we have a value area, a fair value gap. And it was here. It's this IFVG, which is even stronger. So we have an invalidated fair value gap here, right? And we have an active fair value gap here. And we have a value area low here. And look what happened. It swept the low, moved into the fair value, and actually tapped into the invalidated fair value gap area. And then what happened is it popped up. So this is a trade we took, okay? And now we're moving in, we're breaking above strategy 3. We are moving into our primary area here. And if we're moving into the primary area with this much strength, the probability states that we are going to break this high. So I'm holding this trade. Again, it moves into the trigger area of here. So I'm expecting that we pull back and push higher. So we find another fair value gap. Here we go. It's pulled down, fair value area, sweeps it, pushes up. We can buy again, right? Stop in the body of this breaker candle here for a retest the highs. So as it pushes up, guess what happens? We come up, we go strong, we break above it, and we pull back into fair value, and we start to push again. We can buy again for this test here. And, you know, obviously we would have been taking profits, and then look what happens. It doesn't break it. And where does it pull back into? Okay, we've got 1 fair value, 2 fair value, 3 fair value, right? Pushes down, pushes down, pushes down. We're holding this area, right? Maybe you want to have a larger stop because it should, in theory, break the high. So as it pushes down here and pops up, right, we can have a tight stop where we get ticked out, or we can have a little bit of a wider stop looking for a decent one-to-one to get the sweep higher, right? And there we go, we have it. So as it comes down, you know, it sweeps this, and then we get another confirmation here. We go, okay, well, it's pushed down, came down deeper, V pushed up, right? This is very strong price action, so maybe we add. Okay, and then we get this sweep. Starts to finally break out. Okay, it's come up and it's taken out these highs. Maybe now we want to move our stop up. Right, we can move our stop up to this structure here. And now what does that trade look like? A 2.7 and a 4.1, right? And then that just kept going higher. All right, I want to go into Euro JPY now. I traded that. Okay, so this candle, this line right here, I printed this as soon as I finished my pre-market assessments. I printed this line. So I put one of these things here. Dink. Okay, so let's see what happens. Does my plan actually in fact work out? Right, and I also traded this short as it was dumping, expecting it to take out the lows here, and it did. This one actually took out the lows. Pre-market analysis plan is to buy a rally with 5-minute confirmation with a 3-1. Okay, and then let's see what happened. So we moved into this fair value gap, and this is an IFVG, but look at, you know, it pulled right into this invalidated fair value gap and this, right? And we're inside of a giant fair value gap as well. So, you know, anything could happen. I could take a few losses here, but it was perfectly inside this. Maybe it pushes up, drops, and bounces from there. So maybe I take 1 loss, 1 win. That's what I'm thinking is going to happen. Okay, so I get closed out, and I'm not buying this because I'm buying Euro USD, right? But it does round out, and it just walks and walks and walks and walks and walks and walks and walks. And as it's walking up, again, like we've got the little trigger area right here, which is where everybody's going to get stopped out. And then we've got all this structure up here. This is a fair value gap, respected twice, fell from, right? Fair value gap here, respected, fell from. So there's structure here. I'm not really sure where it's going to pull back, but we did not break this, but we did go pretty damn high into it. So still bullish. Where is the fair value? right? Obviously, we've got structure here. If this is going to continue higher, where was the spiraling breakout from? And this is a little tougher to read, right? We've got a spiral breakout here and here, so this is pretty solid. So is this. Right, there's so much structure in here, so we don't really know how deep the retracement is going to be, but we do expect that it's going to take out the high, at least the high, before fizzling out. So as this creates this, right, and pushes up, we see, okay, this is retracing. If it turns around right now and breaks it, trade's done, don't have a trade. It's already pulled liquidity, don't want to trade it. But if it pulls the lows here, I want to look for longs for break of the highs. And if you trade like me, I like to see an aggressive break that gets stuffed with slow price action. So we see aggressive break, and then strategy 6. 1, 2, 3 small body candles, all consecutively closing higher. You know, this tends to be a squeeze situation, so we can buy here, and we can have a pretty tight stop here for a break of the highs. Okay, so that's a 3-to-1. And most likely what I'm going to do is I'm going to take the majority of the trade off here and then hold it for a primary area. And we have primary highs here and a fair value gap here. So we don't know how it's going to react to this. So as this pushes up, so this is our target, this is the final target here. Okay, do we have a strike area? Do we have spiraling out of a fair value? So we print a fair value here. We've got a doji here. It pulls down and it holds the fair value and continues higher. So we want to anticipate that we're either going to hold this fair value or the next one. So we print another fair value here. Right, now we're going to look for a retest for a continuation higher because this is spiraling action. So we have a breakout. This is an IFVG here, IFVG here. Okay, so we've got structure, structure, potential strategy 1, right? We see the spiraling, and then what happens is it sweeps this low, and then as it goes to take it out, we can draw this out and go, okay, well this is pretty low. It's almost horizontal, but this is spiraling activity, right? And just spiraling is effectively we have a breakout, and then we get a little bit of a channel. What the hell? We get a little bit of a channel where it's tightly coiling from that breakout point, right? And then as price pulls down into this, it immediately pushes back up and takes out the high. Now, the probabilities say here that it will in fact respect this fair value area. So as long as it maintains above it, we have a potential breakout structure. So when this starts to pull back down into a fair area, we can buy, stop, right, and look for some kind of high to get taken out. Push up, fair value, pushes up, pulls down, breaks the highs, fair value, pulls back into it, pushes up, we buy, or we can buy here, we buy here. Okay, so let's just say we buy as it's pushing up, right? We want to at least give it a little bit of room to breathe to make sure we're not wrong. It has to take out structure for it to actually turn around, and we go for that target to take out the highs, and we finally get it, right? And now we get a very decent sweep of the lows, right? And we have a fair value, and as this pushes up, look at this, it pushes really high into it. So this is not a short, it's actually long, okay? And this is another trade I took. This is the last trade I took in the evening, and I actually won this trade because I took profits fast because I wanted to go to sleep. So we broke down, right? Push back up, right? This is not really great shorting material here. I mean, right here, yes, this was an entry for me to go short, but we broke highs, and I don't know if we're gonna just dump from the highs or we're going to continue a little bit longer, so I don't want to short it. Now this comes up and it tests that trigger candle. And now we have the IFVG, right? Here and here, right? Okay, here as well. Comes down, here's a trigger candle, comes in, sweeps it, fair value entry. We enter on the push higher. The stop can be here or below the structure, right? As it confirms, we'll move our candle up to somewhere in the body of this order block. Because if it tests the high and pushes higher, we still got a chance. If it comes deep into the order block, like down here, it's going to break it. Like just it is. So now we're expecting it to fill this fair value gap, and obviously you can see what happened is it didn't. Right? It did push and break highs. I was in multiple trades. I was in a Euro USD, AUD USD, and this, and I was expecting $1,000 profit on this. It went up to about 250 and came down to about 150, and I just started closing everything out because I was up about $2,000 on everything that I was in. So finally, AUD USD. Same thing happened where we had a dump yesterday and we pushed highs, and then this is where I was trading. And I took my two losses yesterday on AUD USD. So and it's ridiculous because I do this all the time and I really need to stop doing this. So did we get a high test? Yes. Should we turn around and break it and continue higher? Yes. So what am I looking at? Right? We've got a strike area and a fair value. And we've got a strike area and a fair value. So I bought up here and I averaged in down here on this pop-up, and then it failed. And as it failed again here, I closed it because my stop is here and it's pushing aggressively into my stop. So I close this buy and I short. This is my short. And what does it do is it immediately turns around and taps me out. And then what does it do? It holds this damn area perfectly for hours. And I'm out with the wife at dinner this whole time. It never came back and swept this low. This is a very valid entry. It just didn't work out very quick. And I got a very I bought right at the break, which is stupid. I thought this is breaking pretty hard. I might as well just get in now. And didn't work out too well. Right, so now I'm in drawdown. I'm like, I don't want to be in drawdown. I don't want to take a full loss. And I just closed out here for a decent sized loss. But what happened? Look, pushed really high. Okay, and then we have this green line. This is a target. So let's find another trade entry. We broke out of this. We pushed back down. We pushed back up. We pushed back down. And then we broke out here. So we want to look for a fair value entry. Obviously, we can see what happened. So let's just draw out as we're breaking this. Let's say we didn't trade here. We were looking up here, and we're like, oh, okay, this is extended. We need to find like a good time to get in. Fair value area here. Fair value area here. Fair value area here. Okay, so we're just going to say to ourselves, as long as it respects a fair value, we're going to get in. And then we're going to take it for a sweep of the highs. So this pulls in. Okay, we've got lows, sweeps the lows, pops up. Okay, comes back down. Maybe we get in somewhere around here, right? And we want to put our stop within the body of this breaker candle. And unfortunately, I think we would have gotten stopped out here if we had that tight stop, right? I do sometimes like to do what I call a 2-point protection. Right, so we get a correction under a level, and then there's one fair value, two fair values. So we would initially have our trade like this in the body of this candle. Okay, it pushes down, it doesn't take it out, it pushes up again. Okay, maybe we can add now and put our stop like so. Okay, we need to be a little bit more sure of what's going to happen at this point. Right, so here we go. And let's say we didn't get that. right? Instead, we print a fair value gap, and we can see that it's just crawling up. As it breaks the highs here, we're expecting that maybe it pulls down under this, fills the fair value, and pushes higher. It doesn't. I've missed out on a lot of good trades waiting for a pullback from these levels, right? We've got the fair value here. Our stop point is here. Right? So we're waiting for a pull on this into the fair value, or at least some kind of red candle fill. Doesn't happen. But if it did, let's say it came down, started to push up, we get in long. Where do we put our stop? We put it inside this order block, right? And then we go for the highs. Didn't get it really an entry on that one. So how could we have made sure that we do get the entry? Okay, this is really extended. We push up, we pull down. It's in a fair value. It pushes up. Pushes down, pushes up, pushes down, pushes up. Maybe we take it and we're like, okay, if we break the highs here, or we break this high here as we're starting to push, I buy, stop, fair value, or potentially inside this OB, right? Just see what happens. Maybe it moves quick, maybe it doesn't, and it moves into this key structure area that we have been targeting, right? These highs. Right, takes it out and actually continues for quite some time, and you can see where we're at now. Right, so again, right now we are modeling or ranging inside of a fair value distribution area. Right, so we've got this fair value, and we've got, it looks like something over here. No, not really. Here potentially, right? And what's this look like so far? Is this something that we would want to trade, right? Okay, it swept the lows, it immediately corrected. So now what do we have here? If we're going to be active traders, where is a fair value area for us to trade, right? This is printed aggressively, so we're not really sure what's going on in here just yet. But this is a fair value area. Look at this, right? So it's printed this. This is effectively strategy 1. So we could buy here, and because this is so massive, we'd have to put our stop kind of far away. And we could say, all right, well, we're expecting a break of the highs. So it's still a 1-to-1. Now let's say instead it comes down and it sweeps this, okay, and then it pushes up, right? And then it pushes down. And then it pushes up, comes down a little bit deep, not as deep, right, and then pushes the highs here. So now we could say, all right, we have an invalidated fair value gap here. We're breaking the highs here. If it pulls back down somewhere into this range like this and pushes higher, we can buy and set our stop underneath the range that is just printed, right, to see if we can get that break to the upside and take out the highs, right, which are, looks like here. Yes. All right, and as it starts to push up, right, we don't really need to keep our stop that far anymore. We can just say, all right, well, let's move the stop up, or at least take profits. All right, and you can see this is working out right now anyways. Guys, thank you for coming in and watching the video. This is the daily recap. Thank you so much, and I'll talk to you soon. Bye.